Hello and welcome everyone to our fourth and final financial planning webinar. We've had a really good month so far with some guest speakers. And today we actually have Lone Star Capital Bank and ABIP. Lone Star Capital Bank is a locally owned community bank that serves San Antonio and surrounding areas since 2003. They specialize in consumer and commercial services, but most importantly, Lone Star Capital Bank specializes in customer service. We also have ABIP, who is a financial advisory firm that helps clients focus on their goals and obstacles and provides support to help them navigate through different stages of the consumer's life. As advisors, they deliver a variety of assurance, tax, accounting, and specialized solutions that provide clients with the information necessary to successfully manage their business and everyday lives. So welcome both of you. We've got Jennifer, who's going to be talking for Lone Star Capital Bank, and Joe and Lindsay talking for ABIP. So Jennifer, if you want to share your screen and get started.
Okay, sure. Thank you, Kylie. As Kylie stated, my name is Jennifer. I am the Vice President and Retail Banking Manager here at Lone Star Capital Bank. I've been here with the bank, it'll be 10 years in January, and the entire time I've been on the retail banking side. So I hope to share some good information with you guys in regards to personal banking, your personal accounts, the accounts that we have to offer, as well as CDs, consumer lending, and a little bit of fraud tips for you. So we offer several checking accounts. We have a basic checking, we have a premium checking, and a senior checking. Our senior checking is for those customers 60 and older. There's no monthly service fee, no minimum balance requirement. It does come with some perks for our seniors, which is your 2 free boxes of checks per year. You get free cashier's checks and 50% discount on safe deposit boxes. We do online banking and bill pay is standard across the board for all of our customers. So whether you have a personal account or a business account, online banking, bill pay, those are all options for you. As a consumer, you also have the option for mobile deposit, where you can take a picture of a check that you have and just do your deposit through the mobile app. Our basic checking account has a $5 monthly service fee. There's unlimited transactions that can post to this account. As long as you maintain the $1,000 minimum balance, you can avoid that $5 fee. And then of course, your online banking, your mobile banking, e-statements, you get a debit card, and it's $50 to open. And then we have a premium checking. This one is going to earn interest. The other two do not. But this one has a $10 monthly service fee unless you maintain a minimum balance of $1,000. And then you get the standard with your unlimited transactions. You also get a free box of bank design checks, and then online banking, mobile banking, e-statements, and your debit card. And that one is also $50 to open. These are products that we typically talk to about customers, but the next screen I'm going to go to is going to be some of our more popular checking accounts for consumers, and these are called CASASA. CASASA doesn't stand for anything. It's actually just a funny term that the company uses. They are a bank financial institution company that a lot of banks use and kind of help us with our products. But all of the CASASA accounts are completely free. It doesn't cost you anything, and they all have rewards that you can earn. The free CASASA Cash is one of our most popular ones. As we all know, rates are kind of low right now everywhere across the board. This free CASASA Cash, you can earn 2.5% APY on balances up to $25,000. Anything over the $25,000, there's an APY blended yield, but you are going to get that 2.5% up to $25,000. There are qualifications that need to be met on this account. They're very simple. They're things that most people do anyway, day to day. And so it includes having e-statements, having at least 12 debit card transactions per month, and then having either direct deposit, ACH, or one bill payment post to your account per month. Like I said, the qualifications, that's stuff that most of us do anyway with our checking account. And then you're able to earn, a very high interest rate. These accounts also only have they're only $1 to open. And then you get ATM refunds up to $20 per month, as long as you meet all of the qualifications. So if you visit, another institution and use their ATM and they charge a $3 fee, you'll get that refunded right back into your account. We also have the Kasasa Cash Back. This account is more geared to customers who maybe aren't going to have a higher balance where the interest is going to be really beneficial for them. This one, you're going to earn cash back. So you get 3% cash back on your debit card purchases. This is up to $250 on purchases, which equals $7.50 per month. So as long as you're swiping your card up to $250 per month, you'll earn the full $750. Again, those same qualifications are in place, and that's your 12 debit card transactions, enroll in online banking and get e-statements, and then 1 ACH, direct deposit, or bill pay per month. This account as well is only $1 to open, and you have the same ATM refunds available to you. And so this one is actually one of our very popular accounts. The interest one is really popular too. They both are actually. But this one, like I said, for those who aren't going to have maybe a higher balance where the interest won't be as beneficial, you can easily get $7.50 per month. And then we have a Kasasa Saver. So this is a savings account. This account links to either the Kasasa Cash or the Kasasa Cash Back. And so what we can do is we set it up so that whatever rewards you're earning, those can be automatically deposited into your savings account. And so that $7.50, instead of it going into your checking account, it can go into your savings account. Your ATM refunds, if you racked up $15 in ATM fees, we can go ahead and we'll move that directly into your savings account. So it also helps encourage you, to save a little bit. It adds to your savings account balance monthly. And this one earns a very good interest as well. So as long as you're meeting those account qualifications, those simple 12 transactions per month with your debit card, e-statements, and 1 ACH bill pay or direct deposit, you can earn 1% APY on balances up to $25,000, and then 0.25% APY on balances over $25,000. And that would be kind of like the adjusted rate. And if you don't meet the qualifications, you're still going to earn interest. It's just at 0.05%. Again, all of the Kasasa accounts are completely free. So if you don't meet qualifications, you're never charged a service charge. You can just try the next month to earn your reward, but there's no service charge that will ever be posted to this account. And then we have our consumer lending. So we offer loans for, all of our customers. If you're interested in a personal loan, whether it's to consolidate debt, take a vacation, use that money for medical expenses, a wedding, a trip, whatever it is, we can definitely help you with your needs on that. We do auto loans, home improvement loans, real estate, interim construction. We have a fairly easy process for doing this because we are a small community bank. We're very, we're available. We're available to help you. We're here to pick up the phone. We talk to our customers, daily. We're here for whatever assistance they may need. On our website, you can actually do the loan application. The same with all of our checking accounts on the personal side. You can visit our website and you're able to do the application there and submit that. But this is what we do offer in loans. We do have loans on the commercial side as well, but we're just kind of looking at the personal right now. And then we have several CDs that we offer. Our certificate of deposit, so they can vary in terms anywhere from 30 days, that should be 30 days to 5 years. And then $1,000 minimum to open. Then we also offer two, they're kind of considered promotional CDs, but they've been around forever. The Capital Builder CD, you can open that with $500. It's an 18-month term, and you can add to it in increments of $100. So that's a great way to work towards saving. You may open it with $1,500 and then add, $400 to it per month for the next 18 months. And at the end of the term, you've, put a pretty good amount into that CD. This one can also be, once it matures, you can roll it over and have it roll for another 18-month terms if you'd like. Then we have the Take the Rate Accelerator CD. And this one, as we know, rates are low right now. This CD is for a 2-year term. And at any time, if the rates go up and you contact us and say, hey, the rate has gone up, I want to go ahead and take the higher rate, we'll go ahead and do that for you. So we'll bump you up to the higher rate during the term of your CD. This is a, one-time bump up, but it's kind of good. You can lock it in at whatever it's at right now and then wait for rates to get better. Okay, and then this is going over fraud. So as we all know, fraud these days is really big. We see a lot of it. I'm sure you hear a lot about it on the news, or even just talking to, other people, friends, neighbors, family members. Somebody is getting their debit card, compromised, or, maybe their online banking, something has gone on. And so we at Lone Star Capital Bank, we have a department that works really, really hard and monitors account activity to help eliminate some of the fraud, activity that happens. And so they monitor debit card transactions, they get used to what customers are doing. And so the system is going to flag, unusual activity. They'll contact the customer, reach out to them, verify charges. If it wasn't them, cancel their card, get a new card for them. The same thing goes for online banking. There's a system that's built into place and it kind of picks up like an algorithm of what you're doing with your online banking. So if there's unusual activity, logins maybe in different areas, or, spending more time on one screen than normal, it's going to kind of flag it. And our staff here will reach out to you to kind of verify, is everything okay? So those are two of the ways that we work really hard to help prevent fraud and protect, our customers and their money. These are some steps that you can take to kind of help, eliminate this stuff for yourself. And so if you log into online banking daily and review your account activity, so review transactions, if there's something unusual or something that you don't recognize, definitely contact, us or contact your financial institution, wherever it is that you're banking, reach out to them and kind of make sure, nothing strange has happened. The quicker you act on it, the quicker, the bank can take action to stop any other discrepancies from happening. Use bill pay whenever possible. So a lot of people have gone away from writing checks. Bill pay is a safer option because bill pay cuts a check without your account number associated with it. So if that check is sent to a company and doesn't make it where it needs to go, your information is not compromised. Also, a lot of times bill pay is able to send payments electronically, which will alleviate the need for a check altogether. Another recommendation is to change your passwords frequently. And following up with that, when you're on a website, just make sure that you log out of it. Don't just close your browser, make sure you've actually signed out. Keep your contact information up to date. This is a big one because as soon as we notice something strange on your account, we're going to reach out to you. We're going to try and call you. We may send you an email. So if the information that we have on file is not up to date, it makes it a little more difficult for us to get a hold of you. And then do not log into banking sites using public Wi-Fi. Obviously, public Wi-Fi is not secure, so you don't want your information to be put onto a public network where it can be compromised. But that's just kind of like a quick recap on fraud. I do want to say that, Lone Star Capital Bank, we have several locations. We've got 2 locations here in San Antonio. We have 4 in the Hill Country. That's going to be Johnson City, Blanco, Marble Falls, and Dripping Springs. We are, like I said, a community bank. We're here to help our community. We participate in a lot of community events as far as like the night for the Leukemia Lymphoma Society. We participate in the Angel Tree, United Way, Team Ability. We donate to the food bank. And so we're here to help if you have questions, banking questions, if you're interested, hopefully in opening an account with us, coming and seeing us at one of our branches or visiting our website. Feel free to give us a call with any questions that you may have.
Great. Thank you, Jennifer. I appreciate that.
Thank you.
Okay, so we have Joe and Lindsay.
Hi, Kylie. Thank you for having us today. My name is Joe Gubick. What we really wanted to talk to you all about today is finding value through disruption. And 2020, we have experienced a challenging amount of disruption. But even prior to 2020 arriving, if you go back a year ago, I remember thinking with all the disruption that was taking place, particularly retail industry, we were seeing a lot of bankruptcies and closures of the traditional brick and mortar locations of retail because of the shift in consumer behavior. And I think a big component of that, Amazon did a great job of making that consumer purchase through an online experience relatively easy over time. And they had invested a lot of infrastructure on the information technology side and on their management teams and on investor capital and having that runway to make those investments. And so what we saw was this shift in consumer behavior that really drove online sales. And that online sales was made easy because browsing for the product that you were looking for was easy to find, and making the purchase was easy to do. And should the purchase not reach satisfaction for whatever reason, the return was easy to do. And so you're already seeing that shift, and that and other locations or other industries such as groceries started into that, and they started looking at, hey, what are ways we can do to have multiple revenue streams? And they started with, okay, we're going to have some online ordering capabilities, and we'll have pickup and delivery. And that was kind of just getting going. And a lot of people used that, particularly when they came back from vacation, or if they were just unable to physically go to the stores. Well, we roll into 2020, and we were really restricted in the physical presence of people going into these establishments, right? We're required to remain in distance. We had things shut down. It really disrupted everything. And those businesses that had made those investments in information technology and management and back office systems and had good relationships with their capital lenders, be it banks or investors or both, we're well prepared to kind of weather the storm. And we're still in it, and we're still trying to find ways to have multiple revenue streams. You've seen that, in particular, the hospitality industry got crushed because of that. A lot of the restaurants were already doing some form of online presence, and those that had that investment were able to, although it still hurt this year, we're able to have some sort of a jump into, hey, we can deliver, we can have you pick it up, and we can still keep going. And so the shutdown was less severe for some of those folks. Also, if they had drive-through capabilities, those investments kind of helped along as well. So they kind of were finding ways to get around that physical presence requirement. And as of recent, it's 26% of folks so far through September have taken advantage of a payment deferral plan. 6 million folks missed their September mortgage or rent payment. And about a third of folks believe that eviction or foreclosure is likely in the next couple of months. Now, this disruption not only happens on the business side, but it also happens on the personal side. And when that happens, there's dire consequences, because these are folks that we work and live with every day, and people are struggling. So as one of the questions, then we say, okay, how far and how flexible can the banks be, right? Banks have a business of their own. They have to preserve the capital. When the PPP money runs out, what happens then? What happens with businesses that have loan covenant violations? Those are questions that, as the management team is assessing situations, that having those relationships, both, and good communication, both internally with folks to find out what's going on, and also with the banks to find out what's going on, and making sure that everything is transparent in terms of results, is helpful to weather this storm that we're experiencing. Now, that also, some of that behavior that happens because of the disruption, in the next slide, you're going to see that what happens is behavior as a result of consequence drives certain type of fraudulent activity. And there's a 92% projected increase in 12 months. And as of August, there was a 77% increase in fraud and a 41% increase in unemployment fraud. And so that's not a surprise, given today's environment. And unfortunately, when people go from a really, really good time in terms of an economic standpoint, where everything was flourishing, we were under 3% unemployment in 2019, and then everything gets turned on its heels, we then have behavior that normally maybe people wouldn't have done, but are starting to do or exploring. And so relooking and revisiting and ensuring that internal controls are in place, they're relevant to today, to what's going on. Things have shifted so much, so that may mean horsepower is down and on the team where it's not as big as it used to be, and people are wearing multiple hats and doing multiple things. That's another area. So on the next slide, what we really look at is through this whole disruption is what is the solution, and what can you do? What can we do to get through it? So you want to look at recovering if it's fallen off of the shelf, and then stabilizing, and then growing, right? So some of the things we're going to go through is we're going to look at, is it possible to sell or buy a business as of now and say, hey, we're in a good spot, or no, we need to sell it and salvage what we can. We're going to take a look at the PPP funding impact and where there's some cash generation opportunities there, and then a value rebuilding process of that recovery, stability, and growth. So this next slide, I'm going to talk about, in that atmosphere of selling or buying, interesting figures here is the baby boomer. And this was already coming to play. Like I talked about at the beginning, is there was already disruption coming. And this one, although this was a extreme disruption, hopefully we never see this again. But this is where we're at. And in terms of the baby boomers, the average baby boomer right now is 65 years old, and they own 60% of all the businesses. So what do they do with those businesses? 70% are trying to sell to an outside party, and 30% are attempting a family succession. And these don't happen overnight, right? It takes some time, it takes some planning. And also when things don't go the way we thought it would, even if, let's say, they were great in last year, which most places were doing fairly well, and this year has pivoted in the opposite direction, and management is required to pivot the business to stabilize it. These are the areas where they can determine, okay, is it time to sell it now or down the road? Or if they've managed to weather this storm because they've already had the right bets on the table with their investments, is it time to find bargain deals? So these are the things that folks can be looking after. And I'm going to let Lindsay Duke handle the next slide and the rest of the presentation. She's going to talk about the loan impact, the PPP funding, and a bunch of other really cool stuff and good cash generation ideas that y'all can utilize in your businesses.
Thank you, Joe. Just kind of as an overview, over 5 million businesses have benefited from PPP loans. They've applied for and received funding. And while there's still funds available, the program is not closed unless there's an additional round of PPP funding authorized by Congress, which there are talks to do that. The original intent, of course, was to get money in the hands of businesses to help them keep employees employed and keep their businesses operational throughout the kind of figuring out how to deal with the pandemic. One unintended side effect of the loans is related to the tax impact. So these loans are intended to be fully forgivable as basically a cash grant to businesses who meet certain criteria. But what we're seeing is that even though the loans were not intended to be considered income for tax purposes, the IRS has taken the position that, okay, as that is the case, the expenses paid for with those funds, so for example, employee wages, rent, utilities, things of that nature, are no longer going to be deductible on the tax return, which, if you consider the original intent was to help businesses and not necessarily cause an increase in tax, it kind of goes against the intent of that original congressional purpose. So the way things stand right now is if there is a loan that is fully forgiven, though that is treated as a grant, it's not income for tax purposes, but the expenses incurred are no longer deductible. That is going to increase tax liability for many businesses, depending on other issues that are coming up. For example, if there's been a decline in the business. There are proposals to change that. However, nothing has made it through Congress at this time. So what we suggest at this point is talking with your tax professional to understand how that might influence or impact your tax position. And are there steps you need to be taking right now to better understand that and to mitigate that potential increase in tax? And then there's also the issue of what if COVID goes another year? We know there are discussions of additional rounds of PPP funding and other programs that are designed to help businesses. But as it stands at this point, there is nothing that has been finalized. And we may not see that until after the election. So there's also some confusion around loan forgiveness. For example, we have many clients who ask, when can we even apply? Or how long do we have to spend the funds? Or once we apply, when do we hear back? So kind of running through those answers, the first question we hear most often is, when do I have to be done using my funds in order to be eligible for full loan forgiveness? And that answer depends. You can either choose an 8-week period if you received your loan before June 5th, or you can go ahead and elect a 24-week period. And this has had the impact of being more beneficial to many businesses because they weren't able to move through their funds within that 8-week time period, and a portion of those funds were going to end up being non-forgivable. So with that extended time period, it's really been beneficial to many businesses. Once the funds are completely used, the business can then apply for loan forgiveness. Even if they haven't reached the end of that 24-week period, they're still eligible to apply for forgiveness. However, some of the nuances in, for example, if they've reduced salaries or wages or they've reduced headcount, they may want to wait until after that 24-week period, but they don't necessarily have to. There's also some confusion around the deadline. So you've spent all your funds and you're ready to apply for forgiveness. How long do you have? You have 10 months after the end of your covered period to apply for loan forgiveness. So there's no immediate deadline. There's no rush. And in fact, many banks aren't prepared to take on a large amount of the PPP loan forgiveness applications at this time. What we've seen are some banks are actually taking the approach of a phased review where they extend invitations to businesses to apply for loan forgiveness, but they won't accept that loan application or loan forgiveness application until they're ready. So the main thing businesses should be doing right now are gathering the documentation they need to support that loan forgiveness application and doing what they can to make sure they're going to achieve full forgiveness. Once they've submitted the application for loan forgiveness, the lender has 60 days to review and make a determination. And then they'll submit the information to the SBA, who then has 90 days to basically reimburse the lender. And at that point, the determination will be made on loan forgiveness and if any portion is non-forgivable. And it's after that point that the business would be responsible for making those payments. So to mitigate some of the issues with the tax impact of PPP loans, there's actually some beneficial items that were introduced in the CARES Act. One of those, and we're going to talk about the two most lucrative, most beneficial from what we've seen so far. The first is the ability for businesses who have a loss position in either 2020, 2019, or prior years up to, I believe, 2017, to carry back that loss up to 5 years. And the reason that's beneficial is if you have a loss, for example, in 2020, previously you could only carry that loss forward, and you would have to wait to another year to basically benefit from that loss. When you have the ability to carry it backwards 5 years, not only are you going to be able to generate cash now by requesting a refund, but the value of that loss in tax terms is actually higher because the tax rate was higher. So you're able to generate cash for business purposes and to keep the business operational more immediately than if you were to wait and carry it forward. Another area that is an opportunity right now are R&D tax credits. This kind of interacts with the NOL carrybacks. Typically, when we look at an R&D tax credit, these are available to businesses who are developing new products or improvements to products, developing improved processes or techniques, and especially in the time where businesses are adapting to the life as we know it now, we've seen significant change in as far as business processes, manufacturing processes, software implementations to support work from home arrangements. And just in general, many businesses are reinventing themselves to some extent in ways that would be potentially qualifying for the R&D tax credit. The credit is available not only for the current tax year, but typically up to 3 years prior. The way the NOLs are working, it's opened up the opportunity to go back even further to benefit from these R&D tax credits. So for example, if you carry back a loss 5 years and it's completely used, you can then calculate an R&D tax credit that you can carry forward. So the way the R&D tax credits work, if you aren't able to use that tax benefit in a current year, you can look back 1 year and carry it back to generate cash, or carry it forward for up to 20 years. So the value of that credit doesn't go away if you aren't able to use it in the current year. And we're finding that many businesses are able to benefit from carryback of the credit and also basically harvesting prior year credits to carry forward to offset that additional tax liability that may arise from the PPP loan inability to deduct expenses. And with that, I'll kind of wrap up.
Thank you, guys. I really appreciate it. And if anyone has any questions, they can reach out to Integrity. Thanks for your time today.
Thanks for having us.